Well, gold rallied sharply today on the back of what traders and analysts said was a rush of hedge fund buying at the start of the new quarter, following the strongest quarterly gain in bullion price in over 2 years. Gold rose by just over 5% last month, its largest monthly percentage gain since January's 11% increase. While on a quarterly basis, gold gained 10.6% for its biggest quarterly rise since the second quarter of 2010. Bevan Jones, General Manager at London Commodity Stockbrokers, joins us for more on the desk. Bevan, thanks very much for your time. Well, tell us what is afoot in the world of commodities and what happens if China and Japan go head to head.
Yeah, I think with the lack of love for all the other commodities out there, I think everyone is doing the copycat trade, and as you've just said, it's the start of the fourth quarter, and I think a lot of people are they don't have any alternative. Gold seems to be the only thing that people can rely on to go up, and of course, if there is quantitative easing, then gold is bound to benefit. So it really seems to be the only thing that people are running to at the moment.
And sitting next to you is the biggest gold bull around, aren't you, Chris?
Well, no, very much so. And it's basically my contention is that debt levels are actually hyperinflating. There's an enormous escalation of debt. The trillion is the new billion, and effectively the debtor, the person in debt, is politically more powerful than the saver or investor. And so any solution to this over-indebtedness is actually going to be to transfer value from the saver and investor to the indebted, which means effectively bonds and cash start to look quite dodgy assets. Normally your refuge from risk, but becoming increasingly the epicenter of risk as negative real rates get really entrenched into the financial system. And this is basically what we're going to be faced for a long time. Bernanke was saying today that even if the economy picks up, they're still going to be keeping rates low, and that's negative real rates is just eating into the value of cash. The debasement of cash, default risk on bonds is rising all the time.
Viv, how do you feel about the yellow metal? We've actually never debated this long and hard in terms of your thoughts on gold.
Look, I do think that gold will obviously, there's two parts of the gold trade people don't realize. There's the fear trade, which everyone talks about. There's also a love trade. There's a trade in the East especially, where gold is used almost as a normal commodity, you know what I mean, not a consumer good. You buy gold for your son's wedding or your daughter's wedding. You buy gold if someone graduates. You buy gold if someone has any celebration or whatever it may be. So there's also that input coming through. So maybe it's not quite as positive as you think initially, but should things go, as Chris is saying, really badly, should we have a multi-year long, extension to these QE programs that we are seeing, eventually currencies will devalue, and if that happens, gold must naturally go up in value.
It's basically assets that have intrinsic value versus, in other words, their own intrinsic value versus assets that depend on confidence.
Well, we're going into like a stagflation environment where the value of real things it'll be difficult to increase interest rates, but the value of real goods will certainly keep pace. So gold and property and things like that, things you can actually touch will be valuable. And of course, it's wedding season in India and it's Golden Week in China now. So yeah, you are seeing.
What does that mean? $2,000 an ounce? Here we come.
Right. Potentially, yeah. I mean, it might be a bit far for the end of this year, but certainly, looking towards next year.
So the bull run on gold is back, in your opinion?
I think the trend is certainly there, and I think you have to go with the trend, and there's certainly a huge amount of flows, and there's just no other place to put your money really at the moment. I mean, energy commodities are down, even copper's down. People did see that as almost like a precious metal in a sense because of its investment value, but no one's buying it. The Chinese are defaulting on cargoes left, right, and center across all commodities really.
Yeah, that's the problem, is that you've got this downturn which is going to be hitting your other hard assets, such as base metals, and that's why I think the monetary role that gold has traditionally had is coming to the fore, and that's why I think the demand is there. The central banks are restocking on gold at the moment as well, and that's why I think at the end of the day, countries are being trapped in the low interest rates. If you just think Japan, excess of 200% debt to GDP ratio, financing themselves at something like a half to 1% or so. What happens if inflation just pops up a little bit to 1% or 2%? the central bank can't act, because the moment they act, they'll actually expose the insolvency of the Japanese government. And that means it can creep to 3-4, and they can't act.
Let's broaden the discussion to include other commodities, and particularly oil, hovering Brent crude at about $111 a barrel right now. Where are your thoughts on the black commodity?
Yeah, I think we've got a bit of risk premium there in the Middle East. You've got a very irate Iran at the moment. They're not able to sell their oil. The US is putting a huge amount of pressure on them. But I think you're also starting to see the oversupply in the market has now come down. And while demand might not be strong, you're certainly seeing it come more into balance. But again, you've got to look at the funds flow, and next to gold, oil is probably the second most loved commodity for investing and trading in terms of funds and ETFs, etc. And we saw quite a big day in line with equities. I mean, oil tends to rise and fall in line with equities nowadays.
Yeah, I certainly think that if you're looking at the commodity basket and say, if you want to protect yourself, with a hard asset kind of thing, you'd certainly have your precious metals at the top of the list. You'd have energy at the second, and probably food type of commodities, pretty much in the third.